we have 6.6 million more workers seeking unemployment. Senator selling a bunch of stock. Coronavirus reaching over 1 million of cases and over 50,000 in deaths. And my portfolio down 30% as of today, which is April 7th, 2020. Now, obviously, it's been a while since I updated my last video, and it's been a couple of months, and I can't catch up over all the things that have happened. So I'm clearly just going through skim through all of these things, and then I'm going to discuss my strategy. And has anything really changed since my last video, which was quite a long time ago? So initially we had, I believe, 3.3 million unemployed when coronavirus first hit, and then we got the first few states hitting, causing stay-at-home orders. We had California, was one of the first ones. Washington, then we had New York, of course, being right now that is the current hotspot of them and has the majority of cases in the United States. Second, we had many governors sell a bunch of stock February before this actually went down, which leads us to think, did they have any insider information before all of this went down? What was going on in their briefings, in their meetings, that they knew that this was going to happen, and they sold a fortune worth of stocks, like literally millions, maybe billions, just a bunch of stocks before it went down, which obviously, they shorted the market, which uh was just wow. Like what's going on there? A lot of scrutiny going on here. And of course, the noble thing, the reason why the markets are down about 30% from their highs is because of this. And it's causing a lot of things, a lot of problems. We see credit card financial assistance. We have a lot of people that can't pay their mortgage, a lot of companies that can't pay the rent, because this event only happens every 100 years or so. And definitely everybody's being impacted by it. I mean, name it. I mean, even real estate, tech, the consumer, of course, is being impacted the most. Even utilities, industrials. You could even. I'm pretty sure you could even say healthcare in there. Of course, people are only going to be buying what they need now from healthcare companies, instead of things that they don't really need, things that they want, which I can't think of a few things over the top of my head, because mostly healthcare is what you need. But everybody's being affected by this. REITs are not really safe anymore. A lot of companies here are down a lot of companies here in my sector. World Tower, MPW, LTC, Realty Income Corporation, Iron Mountain, New Residential, and I also added Simon Property, just because I think that I don't think that malls are going anywhere, but Simon Property is down quite significantly. We could even go into the price. Simon Property was I believe an $150 stock, or at least around there, and it was like, and this stock has just fallen just dramatically. We could go to the 1 month chart. You can see that 3 months ago this stock was 148. 6 months ago it was 142, 152, and 170 74 back in 2018. And of course it's been going down due to people thinking that malls are going down, due to thinking that online shopping is going to be what's gonna take over the industry, and there's not going to be more stores. People are not going to enjoy the mall experience. People are going to stay at home all the time. They're not going to They're not gonna buy any clothes from us. They're not gonna stop by anywhere and have a nice fun day. And that's why I don't believe that. So that's why I added time and property in there in the real estate portfolio. And I got rid of a few things in other sectors, but everything's still pretty much the same. I have suffered a few dividend cuts. New residential cut by 90%, and that was a risk. I'm still holding it. Of course, I'm down 94%. That's the little value that is left in there is 162 and 53 cents, which is just it hurts a little bit to see that kind of gain. But I'm still holding everything here. I think they have a good team. I don't think they're going to go bankrupt. I think that they can get out of this. And right now their current share price is around 4, which I think is a little bit exaggerated, because I think at least with the assets that they have, they're at least worth 7, which is hard to know. But the bottom point is that everybody's taking a hit. Nobody's here. Nobody in this no company in this portfolio is meant to go without making any money for at least a month. These companies, no company is built to last. To not have to 1 month not have any money coming in. If we're talking about a recession, in a recession you make less money. People are unemployed. You don't get what you usually get. You lose money because people are buying what they need instead of what they actually want. So here, of course, we had the housing crisis. A lot of people were unemployed, which don't even compare to the numbers that we're seeing from what the coronavirus has caused due to slowing down the spread. Back then we had about 600, maybe 900,000 unemployed. Here, easily we beat them with 6.6 million. And the week before that, or I should say the 2 weeks before that, it was 3.3 million. So right now there are 10 million that have filed for unemployment so far that we know of. These are registered. There could be a lot more that are still doing the process. That a lot of people that maybe don't speak English, that don't get the website, or just maybe website delays that have not been processed through yet. So clearly, we're having a lot of issues. That this coronavirus has kind of caused like an economic stop. All the essential businesses, we're talking barbershop. Of course, my mother has actually been affected by this. She actually is not working. I hope they're filed for unemployment. She speaks enough English to understand the website, but I hope they're go to it and do it. And she has her own business. She does nails or cosmetology, whatever you want to call that. And she she's she was basically stopped coming to work. We're in Florida. We're on a stay at home order right now. She can't go into work anymore. She can't. She says she's on a stay-at-home order. She's ordered to stay at home. So now, you thinking about when you're thinking about these businesses, restaurants that can't really, small businesses that can't really keep being open by just having a small, tiny amount of people coming in through the door. A lot of businesses can't do that. I mean, big corporations like McDonald's, in the consumer sector here. I mean, some of these companies are somewhat resistant. We're talking Target, of not that overall resistant, but Home Depot and McDonald's. They're pretty resistant to whatever economic, uh, whatever new economic thing is going on around. But they're pretty resistant, and most of these stocks that I own here in my holdings, most of them are pretty resistant. Uh, Microsoft, just to name a few at the top of my head, AT&T, pretty resistant. MP Medical Properties Trust. This is a REIT that invests in hospitals and care facilities, so they're pretty resistant. Flag, resistant, hasn't cut their dividend in over, I believe, 39 years. Don't think we'll be doing it anytime soon. And of course, healthcare companies and even utilities are feeling the heat at this moment, which we won't see any dividend cuts from them, but it definitely puts a lot of companies here at risk. And the ones that you have lost the most in, the ones that are down the most are the ones that a lot of people are pricing in a dividend cut coming through, especially in new residential. That was already priced. It was expected. It's not. It wasn't unexpected. Come on, it's a mortgage REIT, and with mortgage REITs, they invest in mortgage backed securities. They don't really own any actual property. It's risky. It's a risky investment. It would take me a while to explain this, but overall, it's a risky investment, and that was very expected. So you can see that it was down significantly a lot before they cut their dividend because it was something that we expected. So are the real estate stocks are down massively because so far a few tenants won't be able to pay their rent because of this type of economic backstopper. It completely stops everything. This is not like a recession. It's just we're closing down businesses that just how are those businesses going to pay their rent if they don't have any revenue coming in? They're not making any money, not even a little bit of money. They're completely closed. No money's coming in. And a lot of the real estate properties, they own real estate. So those businesses or whatever they leased out to, like Cheesecake Factory was one of the ones that came out saying they can't pay their rent. There are no customers coming in through, which that one I don't even believe how that's possible. They charge like $8 for a fucking Oreo chocolate shake or whatever it is, and they can't pay the rent. That one I don't really understand. You should have enough cash to at least pay it once through the month, but that one was Cheesecake Factory ain't being truthful about that. I just know they aren't. But yeah, a lot of companies here like Disney, we can um Nike's actually surprisingly doing well with online sales. I don't think that will continue for longer, but they're doing okay. Um, yeah, we don't have a lot of exposure to non-necessities. I guess you could put AT&T and Comcast there, but those are very reliable dividend payers. So I don't think we'll see a cut. Caterpillar, we could see a dividend cut right there, unless I haven't really checked their balance sheet in a while. But those are definitely under risk. But everything else is pretty much reliable. Healthcare and their utilities, and we have a few consumers and real estate companies. So far I have suffered, I guess, one dividend cut. I sold Boeing before before they actually went on that massive drop. Let's just put it at that. Yeah, I sold Boeing on that. If I could find trading. It was a very long time ago. I can't remember. And then I also been selling my bonds to buy stocks. That's also a strategy that I have been implementing. These are I sold a few companies that I just didn't like. Here I sold some bonds. I sold IBM, and it's not that I think they're bad companies. I just saw much better opportunities somewhere else. Delta, I did buy Delta for a short period amount of time, and then I sold it when there were possible talks that they might not pay a dividend, and I was not going to hold, especially since it was such a tiny position. I was not going to all that. But bottom line, since this has happened, I have done my same strategy I was doing long before this. In fact, I invested over $4,000 as soon as the market started dropping. I kept buying little by little. I jumped in a little too quick. I'm gonna be honest there. I jumped a little too quick into it, but I kept doing it. I bought about 800 at first when it first dropped like 500 points, and when it dropped 1,000 points, I bought 600. Then I kept buying and kept buying, and so far I have invested over 20,300 in this portfolio. And you can see here that net cash flow was 20,320. That's how much money I have put in by just doing deposits. And we're down $4,106, which isn't that bad. But everything's still the same. I have kept everything steady.